Hey, everybody, and welcome back to another episode. I've got a very special guest here. Keshav is here. We're talking alternative investment classes today. Get this guy's background. He's been a full-time real estate investor and principal and founder of Clive Capital, a private equity firm that's based out of New York City. Since founding Clive Capital, he's helped investors allocate capital to 7 properties with a combined asset value of more than $150 million, with a projected growth of over $300 million over the next 5 years. That portfolio spans to 900 plus apartments, 500 plus homes under construction in 3 different markets. We're going to be talking about some fun stuff today. Welcome to the show.
Yes, sir. Thank you, Brandon, for having me on.
Yeah. So, for those that don't know you listening in the audience, what's your background and story?
Yeah. So originally background as a software engineer, worked at Amazon, working at Meta, based out of New York City. And, like many of us, parents just invested in the stock market for the most part growing up. And I was really like engineer or doctor, and I can't stand needles or blood, so I chose engineer. But growing up, I did have a fascination for real estate. When I was 2 years old, my mom told me that when we lived in Denver, the only way to get me to go to sleep was to drive around the downtown of Denver and to make me look up at all the big skyscrapers and stuff. And then I think, as a lot of us do, enjoyed playing Monopoly growing up, and specifically in the real estate industry, read Rich Dad Poor Dad when I graduated college 5 years ago, 2019. Then realize like, hey, I don't want to work, uh, for someone else for the rest of my life. So, or I want to have the option at least, right? So real estate was my vehicle. After reading Rich Dad Poor Dad, and I became a realtor, sold a few homes in 2020. Originally thought I was gonna get freedom from buying single family homes and renting them out. And that's how a lot of us get started. Before I got started, though, luckily my roommate actually and my friend, he sent me a Reddit link about someone who's investing in syndications and buying apartment buildings. And at the time, I was like, this sounds so much cooler, buying apartment buildings than buying single family homes.
Yeah.
I'm going to learn about this. And so I reached out, and that was September of 2020, and took a year actually to do my due diligence, because I thought this was too good to be true, to be passively investing outside the stock market into things like real estate and energy, venture capital, all this stuff, because my parents weren't doing it and no one I knew was doing it. So took a year to do my due diligence, learn about it, read up books, YouTube, networking, all that good stuff. And then made my first investment in September of 2021 into 108 apartments in San Antonio. Started seeing the cash flow coming in. I saw the tax benefits too when I, filed my taxes. I'm not a CPA, also, just saying. But I was like, okay, this is working. I didn't get audited, and I'm getting money. It's not a scam. So if I'm going to start investing myself, I might as well do it for my family and friends. So I started Clive Capital in January of 2022 to do exactly that. Primarily help tech employees, high earners, but obviously anyone else who's interested, diversify outside the stock market into real estate, energy, etc., with the 3 goals being superior risk-adjusted returns, right? If we can do better than 10% and not take on a crazy amount of risk, then why not?
Yeah.
2, to build that passive income, like we're all chasing, that cash flow, mailbox money, whatever you want to call it. And then 3, tax benefits. If we can passively and legally reduce how much you have to pay in taxes, then for high earners, that's one of your biggest obstacles to building wealth.
Mm-hmm.
And so, like you said, yeah, help people invest into over 7 properties, 900 apartments, 500 single family homes so far, and just looking to expand and help more people.
Why does investing mean so much to you?
Great question. Yeah. So for me, it's not just about the dollar amount, right? People will say, money can't bring happiness, or life isn't all about money. And it's true, but money impacts the things in life that do matter, right? It impacts relationships, a lot of divorces are because of financial difficulty, unfortunately, right?
Yeah, it's like the number one reason. Yeah.
So, if everyone just had their finances, I mean, it's a lot easier said than done, obviously, but that would be at least get us one step closer to better relationships. That's not to say money can't destroy relationships either, but it's a double-edged sword. Health, right? A lot of people give up the best years of their lives and their health to go, put food on the table to make sure the lights are on for their kids, for their loved ones. So investing isn't just about money, it's about creating the lifestyle that you deserve for yourself and for your loved ones. And eventually, once you've taken care of yourself, giving back to your community, whether it's, charitable foundations, donations, etc.
Why do you think that so many people are not investing? They know it's
Or not.
important. Then why do you think so many people don't invest or they wait later on down the road? Like you've obviously figured out kind of like your why to investing, why it means so much to you. Why do you think it is that some people wait until it's too late to start investing?
Yeah, I think we aren't taught it in school, right? And that's one of the biggest problems that we consistently hear is just we just don't have financial education in our schools. We learn about history and we learn about science, and I mean these are all useful subjects, but I think, realistically, day to day, it's not knowing that, George Washington crossed the Delaware that's going to pay the bills.
Yeah.
it's
Right.
it's knowing how to manage your income and knowing how to manage your expenses, right? How do I, one, make more money, whether that's, higher paying skills, promotions, starting business. Number two, how do I budget, right? Because you will never be free if you're not saving money. But then also, once you get to saving money, it's not good enough to save it because your money's losing value every year. You have to be investing it. So I would say a big part of it's lack of education
Mhm.
from the school system.
Yeah.
And then if not the school system, I mean, you can't blame the school system for everything. We learn a lot of things that the school system doesn't teach us, right? So it's also the people, the environment that you surround yourself with. Are you surrounding yourself with the kind of people who are, you know, career oriented, who are financially oriented, looking at increasing their income, looking at investments, talking about it all the time. So I feel like those are two of the biggest reasons.
Yeah, I think you hit it on the head. It boils down to education. We're just not teaching as much of the universally beneficial skills in our traditional universities that actually prepare people for life. And maybe I'm missing something, but I'm like, why am I learning calculus when why teach that instead of how compound interest works with like credit cards and stuff like that? I've never kind of understood it. So I think you're right. Education is a big part about why people are not doing it. And then they kind of get caught with their pants down a little bit later on in life. But a lot of people are familiar with the stock market. It's the number one thing that people invest in, but it's not taught a lot in universities. How did this stigma that you should invest in stock market come about as being the pop culture main investment vehicle? And why don't you like what beef do you have like with the stock market, if any?
Yeah, yeah. I think, what you are taught is once you get out of school, you're taught that it's the rich dad, poor dad line, right? Get a job, graduate, put money away in a 401k, invest in stocks. I forget what the exact sequence is, but it's like stocks, ETFs, and mutual funds. I think that's it.
Mhm.
And I mean, obviously that's what, Wall Street wants you to believe, right? Because that's how they make their money on, 1 or 2% of however much you invested. I mean, if it's an index fund, it's a lot lower, but that, 0.00001% is on trillions of dollars that are invested. It's just, it comes down to fees, right? And so it's just what the,
There's a
banks
lot
tell
of people
you.
who are you invest and you're getting feed to death. A lot of these mutual fund managers, ETF managers, financial advisors, they're taking a cut no matter what your portfolio does. And I think there's a lot of hidden fees a lot of people don't know about. This is what I preach. If you're getting a financial advisor, get a fiduciary and pay them hourly for financial consulting. Don't give them 1% of your portfolio every year even if it loses money. Like that's one of the biggest things. And then like what they're investing your portfolio in. what fees are the mutual funds and everything charging. There's a lot of people that are getting hit with 2% every year where they'd say, oh, my portfolio did 9% when really it did 11. It could have done 11% that year, but your fees were taken out. And that might not sound like a lot, but if you plug that 2% fee or even 1% fee into a compound interest calculator over 25, 30 years, we're talking about millions of dollars that you're paying out or you're missing out on as an opportunity cost.
Yeah. And I mean, like you said, also financial advisors, they will also, just take fees along the way. And you hit it on the head. That 1% fee, 2% fee, flat fee structure is not incentivized with portfolio performance, right? The type of opportunities that you and I put together, we have to hit a certain benchmark, the preferred return, right? Call it 8%, 10%. For you guys, I know it's 18%, where everything, a certain portion of that beyond that is when we get paid. And we don't really get paid unless we hit that benchmark. So
yeah. Yeah,
I
there's
would say that.
incentivization. There's alignment of incentives. Like, are they going to make money when you make money, or are they not going to make any money if you can't? Right? You got to look for the alignment of incentives here. What are this whole alternative asset thing is blowing up. I argue that it's not mainstream yet, but I think it's eventually going to get there. I know there's some laws in 2012 that came out that made a lot of asset classes available to more mom and pop people to like pool their money together, these alternative asset classes. What are you looking at? What's attractive, and why should people look at going into some alternative investment classes, or at least from a diversification play, consider adding them to the portfolio?
Yeah. I'm actually trying to get as much money myself out of the stock market as I can. I would only keep it around for liquidity requirements, right? You know that in our business, you have to show a certain balance sheet, certain liquidity to get financing for real estate developments. That is the only reason that I would keep money in the stock market. And that's because five, six, a bunch of reasons, I would say. I mean, one, 10% for me personally is not enough per year compounded, right? I want to see if I can do better because the goal is to achieve financial freedom quicker and more stably, right? Which leads me into my second point is stability slash volatility. The stock market could drop 10, 20% in a matter of a few weeks, which we saw it do during COVID when everyone was scared about the lockdown and we didn't know what was going to happen with the economy. I don't know that real estate's going to drop 10, 20% in a few weeks like the stock market does. And if it does, pretty sure I could tell you that the stock market's going to drop even more than just 10, 20%, if that's what real estate is dropping to. Because over time, we've just seen that real estate is a more stable asset class, right? Third, tax benefits. Beyond capital gains, long-term capital gains tax, there aren't that many tax benefits in the stock market, right? You don't get depreciation losses like we get in real estate. You don't get to take advantage of a lot of the expenses that you can deduct on your investments like you can in real estate and other private investments, because my understanding at the end of the day is that it's what you're investing into. When you're investing into the stock market, you're investing into C corps, right? And because of that, you don't get the pass through benefits of depreciation of expenses to reduce your tax liability. But when you invest directly through LLCs or partnerships, then you can take advantage of depreciation of these expenses and reduce the taxable liability on your investments. Even though you make the same amount of income from them, you can pay fewer taxes because you're investing directly into the asset, whether it's a business, real estate, oil and gas, whatever it is, rather than through a REIT or, some sort of publicly traded, I don't know, Chevron, Exxon Mobil, things like that, publicly traded companies.
Mm-hmm. So what are some, just real quick, what are some popular alternative assets? Because people might hear that word and be like, what is that?
Yeah. So alternative assets, and how I define it, at least, it's something that's not really publicly traded. So I would say that's not stocks, that's not bonds, it's not your mutual funds, your ETFs. Crypto, I don't know. I don't know what bucket people would put that into, but I'm not touching crypto within like a 10-foot pole because I don't understand it. If someone understands it, all the more power to them. But I cannot tell you why or how the S&P 500 does what it does, right? But I could tell you, for example, what a piece of real estate does. I could tell you, hey, here's an apartment building. It's bringing in this much revenue. Here are the expenses. Here's the profitability. That is very easy for most people, if not everyone, to understand. So I would say real estate is an asset class that I really like, alternative asset class. Private debt is another not real estate, another alternative asset class I really like.
Yeah.
Just lending out to private businesses, to other real estate. Just say, hey, I'm going to be the bank here. I'm going to give you a loan and you're going to pay me whatever, 12% interest, 14% interest. And in case anything goes bad, you're going to give me whatever collateral. You're going to give me the business, you'll give me the real estate in case you can't pay, right? So I like that because there's security there, there's collateral. And real estate, when you invest in real estate, that is the collateral for the most part, the property itself.
Mhm.
As
How,
long as
how
you
do
invest.
people how do people find this kind of stuff, right? Because they can go on their Robinhood app and find stocks and stuff to invest into. How do they find alternative? So you just named a bunch of them. Next step, if they were interested, how would they go about learning more or investing in an alternative asset class?
Yeah, I think a lot of it is really finding someone who is already investing and investing with them, right? Like you and I both invest, so reaching out to either of us makes sense.
Yeah.
And I would also say that, uh, I recently put together some educational material at, if you can find it at plivecap.com, CLIVE, V as in Victor, CAP.com/alternative hyphen assets. And there you'll see kind of how you find these people. A lot of times we're on LinkedIn posting about the assets that we acquire, how they're performing, just updates, keeping people in the loop. A lot of it's networking, also going to your local real estate meetups, finding people there, listening to podcasts like these, but you have to find someone who's doing it so you can learn from their experience
Mm.
about who's the right person to invest with. Because at the end of the day, that's probably the most important thing, is not really the deal itself, but who you're investing with. If
Yeah.
you have someone who doesn't know what they're doing, they could take a slam dunk deal and totally screw it up. And on the other hand, you have someone who's been through a couple of deals, done this for decades. They'll take a completely screwed up deal and slam dunk it. So
Mhm. Yeah, it's a big part of who is because, like you said, somebody with a lot of experience can take a not so great deal and salvage it versus a newbie can take a great deal and absolutely ruin it. I've seen both happen. And I've
yeah.
I've actually done that in the past. I've taken some really good deals and I've screwed them up. I've been that newbie before. I've lived and learned it and gotten burned from it. What are some of the risks when it comes to investing with these non-publicly traded companies, these alternative asset classes and the people that you deal with?
Yeah, great question. I mean, I think so far on the show, we've been talking about it like it's, just peaches and roses, right? Rainbows and butterflies. What could go wrong? But that's far from the truth. There are people, especially right now, who are losing their shirts because a lot of real estate deals, for example, were bought with very high leverage at the top of the market in 2021, people who are newbies. And a lot of those investors are losing money now. And, SEC lawsuits are going to come out of it. So there are risks if you invest with the wrong person that you could lose your entire investment, right? And for people that could be, savings, retirement accounts. So the risks are, you're obviously, no investment is guaranteed. You could lose your investment if you invest with the wrong person. That being said, I will caveat that with, there was a study done by Knight Frank, I believe, who studied ultra high net worth individuals, people who were worth north of $30 million. Their portfolio still primarily consisted of commercial real estate and private equity opportunities, because they understand that as long as you intelligently take the risk in quotes, and mitigate it as much as you can still come out on top. So I would say that's a risk of investing with the wrong person or group. And then two is there's always macroeconomic factors that are largely out of our control, right? You don't know, for example, if it's in energy, you don't know what oil and gas prices are going to be. Saudi Arabia could just release 1 billion barrels of oil tomorrow and totally
Yeah.
screw up everything. Is it likely to happen? No, but can anything happen in this world, crazy world of ours? Yes. So I would say those are some of the risks, right? Like the person you're investing with, the macroeconomic factors of it all. But that's where investing with the right person comes into place, because that person can do their best, will do their best to mitigate some of these external factors that are out of their control.
What asset classes is Clive Capital focused on in 2024? And what is the draw to those asset classes?
Yeah. So we got our start in multifamily value add. So that's where you take apartment buildings, apartment buildings, and we'll say, keep it simple. You'll renovate them, increase the rents, bring the rents up to market rate, and then sell them off to the next group in 3 to 7 years. Think of that as just glorified house flipping, but instead we're flipping apartment buildings. That's one. We're also involved in ground up built to rent development, just like you are, Brandon. We both love it. That's ground up construction. We are looking to get in. That's what we're in so far. This year, we're really looking to get into private debt, as I mentioned, being the lender, whether it's a construction company or private business. And we're looking into oil and gas. And with oil and gas, I invested myself in November into land in Wyoming, where this private $1 billion company is coming to drill oil and gas. And just got my first return in May, 25% of the principal back. So in just 1 month's payment. So that's been great. And then also got my tax return back that shows that I can actively reduce my W-2 income, because I mentioned I'm at Meta as a software engineer, actively reduce my W-2 income by 80% of my investment. So if I invest 100K, I can reduce my taxable income by 80K. And that's why we like oil and gas.
How is that possible with oil and gas? How can you invest 100 grand and be able to write off $80,000 against your W-2 income?
It's because the losses there, can apply. It's a special rule that applies probably to the entire energy sector in general. In real estate, you have to be a GP, or you have to, like, a general partner, actively
Right.
involved in the business, or you have to be a real estate professional to get those write-offs. We want to incentivize energy independence here in the US. We don't have to go bomb another country for it or start a war. So the tax benefits are significantly greater for energy.
Mhm.
Because I know it's there for solar. I know it's there for oil and gas because I just got my tax return, my tax form, I should say. And so it's just to incentivize that, because they realize, like, oil and gas is even more volatile than real estate, right? Because of it's a global marketplace, right? It's not just domestic. So
Yeah.
they recognize that. And so, as you and I know, sophisticated investors, the government structures the tax code to incentivize certain behaviors. And so one of
Uh-huh.
those, they make the tax benefits that much greater by reducing your W-2, being able to reduce your W-2 income through oil and gas depreciation, so that more people invest in oil and gas here in the
Wow,
US.
I had no idea that limited partners could participate and write off W-2 income. I mean, that's huge. That's a huge benefit. So you're saying that the government has incentivized people to put money into the energy sector because they want to make energy more clean, more efficient, or they've identified that, hey, we need to drive down energy costs, whatever. The government has an incentive to invest in energy. They want to see that sector do well. And so they've changed the laws to say, hey, if you put money into the energy sector, you get a tax write-off, even if it's W-2. You don't have to be a general partner in a real estate deal to get that.
Exactly. Yeah.
Is that fair?
Not a lawyer, not a CPA, but that is my very bare bones understanding of it. I
Yeah.
just invested in November, so I am still picking up the world of oil and gas myself and hoping to bring it to my investors here soon in a couple of months.
Wow. Yeah, that's really fascinating. Good to know on that. That's big. What's driving the interest in the oil and gas business? I know that there's been a lot of interest that's come out recently in the past year or two about oil and gas and a lot of these oil and gas funds that are coming up.
Yeah, great question. I'm working on another series of two pagers and lead magnets for that, but from the research that I've seen so far, we're globally consuming about 100 million barrels a day. And that's amount only it's only been growing these past years. Even as the green energy initiatives ramp up, which we need them, no doubt about it, but it has nowhere near kept up with where demand has grown because you see countries like China and India, a lot of countries developing and rapidly industrializing. And as you rapidly industrialize and societies, communities start doing more well for themselves, your energy needs are going to increase, right? You're going to need more lights to be on, right? You're going to need air conditioners in the summers. And it's not only used in energy, it's used in thousands, like I think at least 5 or 6 thousand daily products that we use. So
Mhm.
it's not, even if we were to completely go the electric vehicle route, I think only 50% of a barrel of oil actually goes towards transportation. The other half of it goes towards jet fuel. I don't see us making electric jets anytime soon.
No, definitely not.
Cargo ships and like plastics, makeup,
Yeah.
sneakers. So the demand is there for sure.
Yeah,
Will
that's
be there.
absolutely wild. Well, if people want to learn more about you, learn more about Clive Capital, learn more about investing in alternative asset classes like the one we just went over that sounds really attractive, where should they go?
Yeah, I would say the best place is to go to that website, the link that I mentioned earlier, clivecap.com/alternative dash assets. That's CLIV as in Victor, E as in elephant, CAP.com/alternative hyphen assets. So there you'll find a two-pager. That's like a quick, it's really a four-pager. I joke that it's a double-sided two-pager on like a quick 5-10 minute read about why you should be investing outside the stock market. If you have an attention span, unlike most of us these days, there's an
Yeah.
ebook that goes into a little more detail. It's like a 20-25 minute read. And then we have a due diligence checklist. Like you mentioned, there are risks with investing. You want to do your due diligence on who you're investing with, what you're investing in. So this is just a handy checklist where you can take this to whoever you're investing with and just run through these questions and make sure that you're investing with the right person.
Love it. We'll make sure that that gets posted in the show notes. It's been a pleasure having you on, my friend.
Yeah, thanks so much, Brandon. I appreciate you having me on.
And hey, if you're listening to this, do us both a favor. Go leave us a review, follow, subscribe to this. It allows us to get more fantastic guests on the show. Share it with your friends and family. We will see you guys next time.